ServiceNow is an interesting artificial intelligence company that's in the middle of the booming AI economy. Of course, for that reason, investors are asking me what's going on with ServiceNow stock. Do I think the stock is a buy, hold, sell? And what about the valuation? And I'll share all those details with you in this video. I'll discuss the latest developments at the company. I'll share with you my proprietary discounted cash flow valuation that calculates a fair value for the stock. And I'll also share with you the valuation on the forward price to earnings basis. And I'll answer if I think this stock is a buy, hold, or a sell at current market prices. That's a lot to cover in a short video, so let's jump right into it after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So ServiceNow's management team said that the AI hype cycle has not slowed for good reason. Enterprises in every industry and every region of the world have AI transformation as priority number one. IT budgets are highly resilient and increasingly focused on strategic mission-critical AI platforms. And if you've been watching my videos, you'll notice that nearly all of the companies I'm talking about are making big investments in artificial intelligence. Companies like Walmart, Target, Home Depot, retailers, right? Brick and mortar retailers are investing in AI to help fuel customer improvements and cost savings. And then you have companies like NVIDIA, AMD, Palantir that keep reporting to investors that demand for their products and services are soaring and going through the roof. ServiceNow is basically telling us more of the same, that businesses are investing aggressively in artificial intelligence. The company saying that their position is highly differentiated because AI work is cross-functional work. ServiceNow integrates the entire tech stack on-premise or in the cloud, any system, any large language model, any data source, and they bring all of that data into a single model. They went on to describe how they move into the AI layer, not just automation, but true AI agents, executing real tasks to drive outcomes across business processes. And of course, businesses are looking to use automation and artificial intelligence to improve the productivity of every employee, to be able to do more with the same amount of workers, or to complete the same amount of work with fewer workers, and thereby improving profitability on their existing revenue base. All businesses, regardless of size or scale, are looking to artificial intelligence to improve in these categories. ServiceNow says that they help customers take advantage of everyone's innovation. Theirs, others, and they put investments together. They make it all work with demand as high as it is. And their next AI program is going to be called Now Next AI. The management team is optimistic, saying that the CRM or customer relationship management opportunity for ServiceNow is massive. So this is a category they are encroaching on Salesforce, which is one of the leaders in customer relationship management. Remember, investors are a little bit concerned about Salesforce being disrupted by companies like ServiceNow. ServiceNow saying that they're delivering a fully integrated AI-powered front office, sales and service, streamlined operations, and dramatically improved time to revenue. And of course, these are categories that Salesforce has been historically dominant with, but ServiceNow is now growing revenue much quicker than Salesforce and gaining market share, to be sure. By the way, this document I'm reading from is ServiceNow's Q2 2025 earnings call transcript with Wall Street Analyst. I made this highlighted document available for my channel members, and you can join my channel for less than $5 a month. You can see the link in the description for all the benefits. This is just one of those benefits. There are many, many more you get as a member of our channel. So now that we've got an idea of what's going on with sales with ServiceNow, I wanted to share with you some valuation parameters. So what you're looking at is my proprietary discounted cash flow valuation model for ServiceNow. I updated this today, and the intrinsic value per share I calculated for this business is $1,027. The current market price is $913, so even if we apply a margin of safety, this stock looks undervalued at current market prices. I also like to look at valuation on a forward price to earnings basis, and my preferred data provider for those valuation metrics is fiscal.ai. And when I retrieve the company's forward PE at 50, the stock looks undervalued as well, with its revenue growth prospects in the total addressable market it's operating inside and the margins that it's generating. The stock looks undervalued at a forward price to earnings of 50. And one of the profit metrics I like to consider is the operating cash flow to sales ratio. And with ServiceNow, again, when I'm getting this data from Fiscal AI, ServiceNow boasts an operating cash flow to sales ratio of 39%. And that figure has been improving consistently since 2017 when it surpassed the 30% threshold. It's been improving from 33.5% to 39%. This is an excellent figure for any company, but especially for a company that's growing revenue as quickly as ServiceNow is growing revenue, consistently in the double digits, oftentimes approaching 20%, and the company's backlog remaining performance obligations suggest that its revenue growth will continue at these levels for at least the next few quarters and perhaps even the next few years. So I've had ServiceNow stock rated as a buy since May 23rd, and investors were asking me, what do I think about the company now since it's been a few months since I evaluated the business? Well, as I shared with you, the business prospects look excellent and the valuation looks attractive. So I will update this buy recommendation on September 5th, 2025, reiterating the fact that I think this stock at the current market price is an attractive investment for long-term investors. Of course, there are risks with any investment, and I always recommend you conduct your own due diligence. This is just my opinion based on my research. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.